Yields on Kenya's Eurobond, which are due in 2024, have fallen by 150 basis points in the first week of May to 18.93%. Now, at those levels, bond yields have risen by over 600 basis points this year alone, and that reflects the market's concern about the East African nation's ability to settle the bond next year. Now, the Finance Ministry aims to issue another bond to pay it off before June 2024, while the IMF's Managing Director, Kristalina Georgieva, described Kenya as an innocent bystander in a global debt squeeze. She says the country is not amongst those which need restructuring. Well, earlier, CGTN's Ramanyang explored why the IMF has an optimistic view of the country despite its cash flow problems.
I know our tax revenue to debt service, rather, as a percentage of tax revenues has really shot up, somewhere between 40 to 50%, depending on the specific month that you're looking at. And you said, and I'm paraphrasing here, Kenya is not one of the countries that you expect to default. But there are, you can see the pressures coming up in cash flows in the country. Civil servant salaries delayed, for example, in the month of March.
Debt levels had increased pre-pandemic. And then, of course, the pandemic came and affected, the path for economic output. It affected the path for revenues, right, quite considerably. So government deficits had to widen as the government was trying to be supportive of economic activity to do social protection in the pandemic years. And then as we were beginning to recover from that, you have the exogenous shocks that came from Russia's invasion of Ukraine and all of the effects that has had on our economies. And also right now, of course, we have capital markets.
The Fed raising rates, capital markets essentially squeezing.
Exactly, capital flowing out of the region. That's why we titled our regional economic outlook, the big funding squeeze. Our countries are going through this really, really big funding squeeze. So that is the overall context in which Kenya has also been, of course, finding itself. What gives us very strong encouragement in Kenya is that, we have had this program where we're supporting the government's reforms for the last couple of years now. And under that program, the government has been implementing it really unstintingly, particularly in terms of the path for the fiscal path, moving the primary to a debt stabilizing level. So that, we have a lot of confidence that this is not a solvency case. This is not, there's no threat to sustainability because the government is doing the reforms. The challenges that we're seeing in the domestic markets really are arising from the bigger funding squeeze that has been spilling over into Kenya. This is exactly what institutions like the IMF are there for. Okay, to provide exceptional financing when countries are facing these kind of difficult external environment. So what gives us confidence really is, first, as I said, it's not just been words, but really the government implementing the program as envisaged. Okay, so it will stabilize the debt levels. The liquidity issues can be addressed by allowing greater flexibility in the, more liquidity and more flexibility in the money markets.